I'll lean into that deal a little bit closer than I may lean into a deal that has a micro VC attached to it, because here's the reason, just for context.
Cheat code.
Cheat code.
All right, guys. So we are here at Cheat Code Unlocked. Now, Cheat Code Unlocked, as you guys know, is here to bring you guys the cheat codes to all different types of industries with the best and most highly qualified people that we know in this space. Now, today we have a very special guest today. Her name is Sequoia Blodgett, the Queen of BC.
What's going
Thanks,
on, Sequoia?
guys.
How you doing?
Yeah.
I'm good. How are you guys?
I'm excited for this one, man. I'm ready to, get right into it. Find out what the cheat code is. I've been actually very curious about the VC space personally. I've always wondered.
Well, first we got to break down what is VC.
Yeah, what is
Yes.
VC?
What we say VC, what does that
Let's start
mean?
from the very low, because I'm starting right there with you guys. So let's get into it. What is VC?
So VC is early stage investing. So if you look at the landscape of investing, what happens is in the very beginning of starting a business, you have to get, if it's a large business, let's put this in full context.
Right.
People will be like, I want to get VC, and no, every business is not qualified.
You can't take your backyard clothing brand to VC pretty much.
Unless it'll scale to a 10x company.
Okay.
Right?
Okay.
So every business is not qualified to be a venture backable business.
Okay.
And so we are the first money in normally.
Okay.
So you'll have, well, not necessarily the first money in. So there's a pre-seed. I'll break all the steps down.
Okay.
Right?
Yeah, I was about to say,
So,
I'm about to get right into it.
There's a pre-seed. And in that pre-seed, it could be angel investors.
Okay.
It could be what's called the friends and family. So typically, when you have a friends and family round, it's your friends and family, right?
Oh, okay. You
Or-
calling up your auntie, your uncles, like, hey, can you help out? Can you help out my business real quick?
Exactly.
Okay.
Or it's also called friends, family, and fools, because nobody knows if the business is going to work yet.
I see.
Right.
I see.
So it's
A
like
leap of faith.
Yeah, it's like, okay, we gonna try it, right?
Right.
So that's typically your first money in. And then VC, venture capital, is an infusion of capital that helps you continue to build the business.
Okay.
So you'll see that typically in your early stages. So you go from pre-seed, then seed, and that's when you start to see venture capitalists.
Okay.
And then series A, B, C, D, however many series you need to raise until a liquidity event, meaning your exit, which can be an IPO or an acquisition.
Okay. A lot of
That's
words
a lot
getting
of
thrown out. Yeah.
Well, you did mention in that explanation angel investing at some point in time during that process. Now, a lot of times when we look at in the investment world and we hear about these big investments being made into companies, we hear angel investing, we hear venture capital, we hear VC, things like that. What is the difference between venture capital and angel investing?
That's a great question. So when it comes to venture capital, it's LP's money, which means there are limited partners who invest in a fund, and then that money gets deployed. So that money gets invested into other businesses. So it's not my money, right? And I think that's a misconception. Some people actually do believe, like, I'm sitting on $100 million and I'm ready to go, right?
Right.
From the angel side, it is my money. So when I'm an angel investor, I'm taking my money and I'm saying, hey, I actually believe in this company. I really think it could be a very large business that could change the world, because we typically look for outsized returns.
Right.
So I'll give you a check out of my pocket, right? So that's the biggest difference. It's not my money in venture capital.
Okay, I see.
That's a key point to remember, you guys. So now when you are looking at, matter of fact, even before I get to that, I want to ask you real quick.
Yeah.
How does somebody become an angel investor? Because I'm sure a lot of people watching this are going to want to know. That sounds pretty easy, pretty straightforward. But how do I find these businesses? How do I become an angel investor so that I can actually make some returns for myself?
Yeah, so it's a good question, because typically these type of finances we've been kept out of these type of financings, right?
Definitely.
So from an angel perspective, you would, if you were in the community, like if you were in the venture community, you would hear about deals, and then those deals you would get access to, and then you'd be able to invest in those deals, right? So it's a very relationship-driven business, whereas, if now they have equity crowdfunding. So you can see all the deals that are out there. The difference is those deals are public, And so sometimes they aren't the greatest deals because they haven't, normally when you got the inside tip, you're getting the better deals, right?
100%.
But there are some diamonds in the rough. And I think that's super important to highlight because as African American people, we haven't been educated fully to understand the dynamics of what it takes to get venture investing. So a lot of times there's a pushback like, oh, African American Black people can't get VC. I had a venture-backed tech business, right?
Oh, okay.
So I didn't understand that. So my business was backed by an investor named Tim Draper, who is his family is a dynasty. Okay. His great-grandfather basically is coined for helping to start venture capital in Silicon Valley. So it's
man, that's massive.
Huge deal. So when I went through that process, I didn't understand that it was hard to get VC because I got VC. Like I had a venture-backed company, right? Building the company was a whole nother story, but I had raised funding to go ahead and start that journey. So there's a kind of a spoken,
misconception type of thing.
Yeah, that Black people can't get funding. Well, for me, I think it's more so we aren't educated on the levels and what you actually need to get that type of funding, right? So we'll go in with maybe a business that's too small. Or we'll go in and maybe we don't have the right team. Or we'll go in and maybe the right investors aren't on the cap table. Like all that stuff matters. So I say that all to say with equity crowdfunding, now as Black people, we can go raise that initial friends and family and fools round. We can go raise that initial seed, pre-seed, whatever. And it still could be a very viable business, right? Because we might have been pushed back from this side, but maybe there's opportunity over here. So it's a harder pool to like sort through, but there are some definite diamonds in the rough when it comes to equity crowdfunding.
Okay. Now, I heard you say, I've been wondering this for a while because, my friends, anybody and everybody that I know, for example, you got companies like Airbnb when they're about to IPO. Everybody's like, yo, how can I, get into Airbnb when Airbnb started really booming and they were, giving the hotel business hell, essentially. Everybody was like, yo, how can I invest in a company like Airbnb before it gets onto the market, right? Without having to have all these, fancy name, venture capital, accredited investor, limited partners and stuff like that. So I want to ask you, right, can you break down the difference between essentially a limited partner, accredited investor, and how a regular person can go about, becoming one of these type of quote unquote positions or acquiring, getting access to these deals.
So
we're trying to get that money.
Yeah, for sure. The cheat code, So being an LP, a limited partner, you have to have relationships. Okay. So you need to know somebody who's raising a fund. Okay. So there's two different types of funds. There are syndicates, which are considered rolling funds. Okay. So essentially the fund is always open. And what happens is that managing partner will get a deal and they'll send it out to their syndicate. The syndicate will say, hey, I want to get in this deal or no, I pass, right? So you're investing literally deal by deal.
I see.
If you're an LP in a fund, you're getting whatever that fund decides to invest in. So you're getting more diversification because the fund could say, hey, we're going to do this company, we're going to do that company, we're going to do this company. You don't have a say in where your money goes. It's just being deployed throughout the fund, right?
You're more hands off.
And you just get a return.
And you get a return. God willing, if everything goes correctly, you'll get that 10x return that everybody's excited about, right?
Okay.
So that's the difference in regards to that.
Oh, okay. So kind of like a ETF type of approach versus regular. Okay, that's
dope. A good way to break it down.
Yeah, that's dope.
So, one thing that stood out about what you said earlier, being that education in the space is important, right? I've been an entrepreneur for 10 years. I've had different types of businesses all along the way. I've had a lot of different experiences in business and entrepreneurship, and venture has always been one of those things that's been, like you said, I've no education whatsoever. I've been in so many different things with different levels of success, and even being in this space around entrepreneurs every day, doing things in business, I still never learned anything in regards to venture capital or angel investing or anything along those lines. So what would you suggest, what would you say is the solution to that for the mass market of entrepreneurs out there, or even the mass market of Black potential investors out there, or just potential investors out there who don't have this information that's readily accessible?
Right.
So I'll speak to the entrepreneur first. I think if I were to give like a quick breakdown of what's necessary in order to even be considered by a venture capitalist, I would say first, it's market size, right? So they're looking at the market. Is this a big enough market? And when I say big enough for us as a firm, we will say, okay, is this a $10 billion market? Right? Because that $10 billion is going to back us into the numbers that we need, contingent upon the revenue model to get us a 10x plus return. So it's all about how much money we can get out of that deal. So when I started investing, I would look at deals and I'd get excited. I'd be like, oh my gosh, this is such a cool company. And then we get into the numbers and they'd be like, yeah, these numbers don't make sense. Right? So you have to have a business model that makes sense in order to get us that return. That's what it comes down to for that. I would also say your team. A lot of entrepreneurs will do their company as like one person. It's like because any business, and everybody knows this, if you're growing a big business, you can't do it by yourself. Right? You have to have, and especially if it's like a tech business, you have to have a CTO, you have to have a CMO, you have to have a CEO, right? And we look at a team, we'll look at the technical founder, and we'll look at sales and marketing and like those two drivers. Because we know if you can get the technical skill sets done and you have sales and marketing, which is how you're going to get the money, then we know that you can actually move a product forward, or at least we have an assumption that you can move a product forward. Another thing that people don't realize is, I think is an interesting story because I used to be a music video director, and it was always, the story was like, you're always as good as your last job, right? So I was always afraid to fail. So I thought it was negative. But when I became an entrepreneur, they're like, yeah, no, fail. Like fail fast. You know what I'm saying? Like
fail fast, fail forward.
Fail fast and fail forward. Exactly. So I think that's another thing we look at in terms of seasoned entrepreneurs. Have you had a business before? Do you understand this process? Do you understand like what a failure looks like? Have you had an exit? Like what does that look like, right? And it's not a negative thing. If you've had several businesses that failed, we're like, okay, great. That means you've gone through the process. You actually know what you need to do, right? Or at least we hoped you had some learnings while you're going through that process. So that's another thing that we absolutely consider. And obviously, are you actually solving a viable problem? Right? So you come into the market and you're like, hey, we want to do this, and this. Is it a problem that people actually feel like there's an issue?
And you know, that's so overrated in entrepreneurship because a lot of people don't realize entrepreneurship is not just about building something that's cool or fun or something or things that you want to see, right? A lot of times the most successful businesses, the most successful entrepreneurs are people that actually are solving real problems. To, you know, the larger the problem you solve as an entrepreneur, the more value you're bringing to the market, the more money you're essentially going to have accessible to you, right? You know, that's really what it is at the core of entrepreneurship. Whether if you're solving somebody's, you know, you're making socks for people, like that's a very minor problem, but a lot of people have it. So you're gonna make a little bit of money, right? But if you have a big problem that a lot of people have, you're gonna be finding yourself making a lot of money. So I think that's a really important point that you made in regards to, you know, addressable market size in the first place. A lot of people don't think about that.
Yeah. So I would definitely say, are you solving a problem that people actually have? So we talk about it as is it a need to have or is it a nice to have? Like, is it a painkiller? You know what I'm saying? Because if it is, we think it's a more viable business, right? And then how have you gone about solving that problem? How is it unique to other people who have solved the problem in the market? The worst thing you could ever come in and tell a VC is there's no competition. They're like, I don't know about that, you know? So you need to know who's on your competitive landscape, even if it's a like hodgepodge of a bunch of different companies and it's a fragmented industry and you're doing something to like pull all those things together. We still need to know, right? But don't ever come and say
there's no competition.
Yeah, because then we're going, did you do your research?
Or if there's probably a reason you ain't got no competition, because probably don't nobody want to be in that space in the first place.
Exactly.
Right. So what about the individual investor though? So like, how do they learn how to become an individual? How do they learn how to get access to these deals?
Yeah, so for the individual investor, you just have to, like I said, you have to understand the relationships, right? So I am in several deals right now that I would not, absolutely not have access to if I didn't have the relationships that I have, right? Because I just I'm not hanging out with those type of people. Those type of people aren't in my ecosystem. They're not in my circle, right? On an everyday basis. They are obviously as a VC, but like at the end of the day, I'm not chilling with those people, right? And a lot of people find deals with their friends. Like they'll be out chilling. This person's building the next NFT. This person's building the next Web3 or crypto, whatever it is. And they're like, okay, cool. Like I'm at a firm and I'll put 2 and 2 together and we will invest, right? For us, that's not necessarily the case. Like we're not doing a whole lot of that type of business, like in terms of venture backable businesses. So having that access, like going out, finding those relationships, connecting to communities like your guys's, and actually getting that education and that knowledge, and then applying that knowledge and making sure that you are building your relationships while you're in those communities.
Man, that's so key.
It's a bar.
That's a whole
That's a bar right there.
She just gave up the cheat code right there. If you weren't listening, you're playing yourself right there. I've heard of this whole like diligence process or due diligence, or when you're looking for companies.
Shout out due diligence.
Shout out due diligence, man. If you've not seen it, hey, make sure to go to Cheat Code TV. But anyways, I've heard of due diligence, doing your due diligence, finding these companies. What should people look for when they're looking for a great company, essentially, to be able to be like, oh, okay, this is a good company that, maybe we should, go in together, and once we finally become accredited investors or limited partners, that we can, essentially look for.
Let me break down that differentiation, because it's important to understand.
Right.
So as an accredited investor, you have to make at least $200,000 in income.
Okay.
So a year, or if you're a couple, you're married, $300,000. And you have to, or you have to have a net worth of $1 million. Right, so you see it why we ain't really been playing in that space.
Super important to know,
right? So they opened up a certification where you could have your Series 7, your Series 65. You could have those, or you're affiliated with a firm. So there's other like nuances. So finance certifications. Yeah, so if you've gone and taken the Series 7, you're a financial advisor, you've taken the Series 65, that's specific to investing, then you can definitely make those type of investments. So that's new. That has not traditionally...
So you mean to tell me that the one way to get around the net worth requirement is to get the certification?
Yep.
So through education.
Either the financial advisor certification or an investor specialist.
Series 65,
Series 65. So essentially, if people just pursue the Series 65, they can actually shortcut themselves, get the cheat code to actually getting into these deals.
That's it. You can actually do that.
We have to put something together on
Series
that side.
65, folks.
Yeah,
you heard it here first. Series 65.
I like that. Okay,
Man, I love that. Yeah.
So that's an accredited investor. And then you have your non-accredited investors. So those type of investors can get into equity crowdfunding, not necessarily venture backable deals, but that's differentiation between the two.
And equity crowdfunding would be things like the Republic.
Yeah, Republic.
GoFundMe.
No, not those, because those are crowdfunding.
Not equity.
Yeah. I'm glad we're differentiating. Yeah,
exactly.
Go ahead and break down the difference.
For sure.
Let's break down. All the
so if you look at a Kickstarter or GoFundMe, they're traditionally known as rewards-based crowdfunding. So I'm going to give you money and you're going to give me a perk. That perk could be, early access to whatever I'm building. That perk could be some additional, whatever it is that I decide, right?
Right.
So that's rewards-based crowdfunding. Then you have equity crowdfunding where you're getting equity in the company, right?
Okay.
So when there's a liquidity event, hopefully your equity cashes out to something. And when I say liquidity event, that means either there's an acquisition or there is an IPO. Now what's interesting is some of these platforms are trying to find other ways to have liquidity events. So say if I'm an early employee at Facebook or Meta, I'll use that as an example, although we'll use Meta. Yeah. Say I'm an early employee at Meta, right? So essentially what will happen is, and why I made that face is because Meta just like fell to death.
Yeah.
No, I know.
But
Shout out to the cheaters in there,
Shout out
man.
to
Killing
our
on that.
community caught the puts, made
Yes.
a bunch of money on the
Yes.
downside. So
So
I
was
feel you on that.
a little hesitant to use that one because the shares
Yeah.
are so low right now. But
Yeah.
say you were early, your shares would have been much lower if you were early, and an early employee, right? But you don't want to wait till liquidity event. You're like, I don't know when this company's going public. I want to get rid of these shares. So essentially what you can do is you can sell those on secondary platforms. And then other investors can come pick those shares up, and then they will still it'll be a discount to what you would have if it had already IPO'd, but it's going to be much more expensive than what that employee had got their shares for, right? So you're basically purchasing their option pool.
Yeah.
Right. Okay.
Yeah.
Okay. Now, where can people go to find something like that? For example, if I wanted to go pick up some of these.
So those are only for accredited investors.
Oh, okay.
So yeah, you have to have a fund or an accreditation to
Alright.
pull those deals off.
So I'm gonna go ahead, go take my Series 65.
Yeah.
There you go.
And I'm gonna pull up on one of those platforms and
Yeah.
pick up these
But like the
options.
average
Okay.
investor could get onto something like Start Engine.
Yes,
or
exactly.
Republic or, you know,
So if you're
Excellent.
non-accredited, so then we talked about rewards from the equity side. There's Start Engine, there is Republic, there are those type of platforms
Right.
where you can make your non-accredited investment. And the cool thing too is I at first was like, damn, like a lot of people aren't pulling in $1 million in net worth, right?
Right.
So, but the way that they've broken it up, I think is interesting because there's usually a minimum when you're on these other platforms.
Right.
And that minimum is, is for that net worth.
Right,
So,
right.
but if you're on a Republic or a Start Engine, your minimum could be $100. It could be $300.
Nice. So you actually can invest in these early stage companies before they go public for $100.
Yeah. Yep.
Wow. So there you go, guys. Listen, if you're out there thinking that you can't get involved into the venture space or at least into investing in companies before they go public because you don't have enough money, you can get involved with less than $200, less than what it costs you for a pair of sneakers. You can actually get into a company that could potentially be the next Facebook, the next Google, the next who knows what, right?
Imagine Apple. It's crazy.
Imagine Apple. So it's all about you. We actually just shot an episode of Due Diligence on Peloton.
Oh.
And Peloton started their, did their entire, they did a Kickstarter campaign
man,
to get off the ground, which obviously is rewards based.
Yep.
But most likely back then, we didn't even have a lot of equity crowdfunding platforms. So chances are you could have found, an early Peloton or something like that, right? So these are the types of things that you guys need to know because it's not always just about investing in the stock market just by itself. You want to diversify, right? You want to have money in the stock market, money in the crypto, money in real estate, but also set aside some money to invest in projects like this, like we were talking about pre-IPO companies that could have a massive payout one day, potentially. Not a whole lot. You don't have to go all in, right? But have some part of your portfolio dedicated to this. I think that's amazing.
I was gonna say, man, that's dope. This information, man, I'm learning. I mean, I've learned a lot, especially the VC. That's something I've been super, super curious about. I've learned a lot, and I think that's something that everybody should really, really dive into, how to get certified or accredited or however they need to get into these companies early, because a lot of folks that we've talked to a lot of people that's like, how did you get successful? And it's through the public markets and, access to the public markets or getting into these companies early. We talked to some gentleman on Clubhouse that was like, man, I have 1,000 shares or 10,000 shares of Apple way before Apple even IPO'd or whatever. It's like, could you imagine having 10,000 shares of Apple today or even 10,000 shares of Amazon today? We're talking millions of dollars just from early stage investing. So definitely get your hands on venture, on, the public markets as soon as possible, man. That's dope.
Yeah. So I would say, I think one of my last questions to you, and I think one of the most critical things, looking back at this conversation, what I really want people to understand or leave this conversation with is some actionable steps for them to be able to get involved in this space. So we already kind of talked about how the average person can get onto something like a Republic or something like a Start Engine. But how does one go about finding those diamonds, right? Because I'm sure if they're on these type of platforms, probably 1 out of 100, 1 out of 200, 1 out of 1,000 maybe might be successful. Somebody like yourself who has a tremendous amount of experience, I'm sure can go a lot farther along of identifying these potential diamonds. But how can the average person go about finding this next apple or whatnot? Like some tangible, maybe a couple. I know you can't obviously do a whole diligence process here, right?
Yeah.
But maybe like a 2 or 3 steps or tips that somebody can go about to find that.
Yeah, so definitely look for a super large market size. Look at the team. Make sure the team actually is interesting. Make sure that it's a problem that you're trying to solve, that is actually a viable problem. Like, is there actually a problem? And then something, when I say problem, I don't necessarily mean like a huge like pain point that's like dire, like we're solving for
Right.
Because Instagram was not that. You know what I'm saying?
Right.
So it's normally a problem like, okay, we don't have access to like posting photos and sharing them with our friends. Like that could be a problem. You know what I'm saying?
100%.
So I think we got to taper the way we look at what a problem is. So yeah, the problem, and then are you uniquely qualified for that? So as the founders, like why you? Because you're not the only one building it at that time. So why can't I go to this other team over here that I know is like has the background and can kill this? Like I already know, you know? So I would look at that. I would also say, what are their projections? Like, where do they see themselves? So one of the questions that we consistently ask is, we want you to have 18 months of runway. So for me, runway is, well, by definition, runway is, when will you run out of money? Like, so you have 18 months, and if you're raising a certain amount of money, we need to know, are you going to get to that 18 months? Are you going to come knocking at our door, you know, because there's a problem? Now, if there is a scaling problem, we can always do a bridge round, which is like another round in between those rounds. But the idea is to get you to raise enough so you don't come knocking at our door, right? So we really want to know, can you get to this through this next 18 months? Particularly, where will you be in that next 18 months? So do you have enough data to show us projections that say, hey, in 18 months, I can be here based off of the things that we've already done, not because you've pulled something out of the clouds. Like, what have you already done that shows me that you can actually get to this next set of milestones that you're trying to get to? And then for us, I mean, I'm speaking specifically from a VC perspective. You can always ask this on a Republic or a Start Engine if you're making these investments. But for us, we're asking you, how much cash do you have in the bank? Like, when are you running out of money? Because that is a concern. If we can't, like, if this round doesn't close until, you know, XYZ, 2 months from now, whatever, do you have enough money to even get to, can you survive? Or are you laying off the staff? Like, what is happening? So we need to know all the interworkings, and we ask very, very, very specific questions. Like, I will go down to the technology. How, if you're telling me it's AI or it's machine learning, I want to know where's the data being pulled from? I want to know where your data sets are being pulled from. I'm asking very specific questions because at the end of the day, we need to know exactly what you're building because we're making this investment. So transparency is 1,000%, right? We need that 1,000%. And so anybody who ever comes to pitch a VC and says, hey, you know, I need you to sign this NDA, forget it. Because at the end of the day, like, I'm seeing so many deals that I'm going to see something like yours. And I just need to know, based off of that, like, I can go and ask you these questions without you putting, you know, like, stop signs up to me, right? Because we hear the red flags. Like, when we literally, clicks. I'm like, I'll be on a call and I can hear, like, okay, we haven't raised this much money, or we raised this much money and we blew through it, or, you know, like, I can hear that stuff and I'm like, check. So I'm literally looking at all the ways that this business is going to fail before we even finish the call, right? Like, I want you to be a success. So I'm hoping that you haven't done all these things, but I'm going to ask you very specifically. There's no, like, I need to know, you know what I'm saying? Because 100%. We're making that investment. And then another thing, this is what a lot of entrepreneurs don't understand, is it matters who's on your cap table. You know what I'm saying? So a cap table shows you all the investors who are in your round. So if I see a Sequoia and Andreessen Horowitz, like a larger VC firm that has credibility, I'm more likely to lean.
Sequoia Capital, the venture capital firm, not Sequoia.
Thank you. If I see me,
okay.
Like, okay, great.
That too, though. You see Sequoia on the cap table.
There you go. So if I see a Sequoia Capital, Andreessen Horowitz, Coastal Ventures, Tiger, if I see any of these names, okay, I'm like, all right, now I'm listening a little bit closer, because those firms are known to invest in outsized deals. They understand the diligence process, and they usually have a great win rate. Like, those are, they have billions of dollars assets under management. So I'll lean into that deal a little bit closer than I may lean into a deal that has a micro VC attached to it, because here's the reason, just for context.
Cheat code.
Cheat code. Because normally if it's a fund that's small, like if I've only raised $10 million and I have a bunch of little small funds on here, normally what is going to happen is if you need to raise another round, you're probably going to go back to those investors first, and they're not going to be able to finance it because they don't have the money. Right. Do you see what I'm saying? So
squeeze them.
Yeah, you already squeezed the juice off the lemonade, at the lemon, right?
Back out the same lemon trying to squeeze the same juice.
Exactly. Exactly. So I want to make sure that if I'm making that investment, that you're going to have the financing to keep this going, because companies cost.
Right.
Right.
Well, 100%. It sounds to me like we need to do something, because all this information is super valuable.
Too valuable.
People out there, if you don't know, man, and I'm sure you do by now, the venture capital space is where billions of dollars are made every single day.
Sequoia, plug yourself in. Where can everybody find you on socials and everything?
Yeah, so my Instagram is Sequoia Blodgett, which is so long. It's SEQUOIA BLODGETT. It has all the vowels.
All the vowels.
Yeah. Let's go.
Sequoia Blodgett or Sequoia.com, or my syndicate is Railway.vc, RALE.
You said Sequoia.com?
Yes.
You own Sequoia.com?
Well, SequoiaB.com.
Okay,
Thank you for clarifying that.
SequoiaB.com.
SequoiaB.com.
Okay, I was about to
drop on that.
Yeah, right.
What's like Cardi B, Sequoia B? What do you do?
Sequoia B.
SequoiaB.com. I do own that. Yes. Thank you for the clarification.
Thank you so much, Sequoia, and we will definitely chop it up after this.
Yes.
You guys, that was the cheat code to venture capital.
Right.
The 3 takeaways I got out of that was to, go out and find the right companies on platforms like Republic, et cetera, educate yourself in the space so that you can, know how to find these different companies and invest in early. And the last cheat code, which I think is the one I'm about to dive into most, is getting those different series items and things like that. If you're not already a high net worth individual, or you can just become a high net worth individual by joining cheat code today, right? You can get your weight up, right?
100%, man.
Get your money up, get your weight up, so you can get into deals like this and be with the big dogs like Sequoia, all right?
Right. Stay tuned, man. We're definitely going to put something special together for you guys out there so you can get your money right, all right? You guys stay tuned. As always, thank you for watching Cheat Code Unlocked and listening to Cheat Code Unlocked. And stay tuned for the next episodes. Cheers.
Yes, sir. Let's go.